Welcome back to Investing Talk Podcast.
Good to be here.
Today, we're taking a deep dive into a major player in the nuclear fuel cycle. That's Cameco.
A really significant name in the space.
Absolutely. Our mission here is to quickly unpack some recent information and analysis about the company. We want to understand its business, its financial health, based on the latest available data we could find, its strengths, the risks it faces, and, well, what might be coming next for you to consider.
That's not a good plan.
And look, if you find this analysis helpful, please do subscribe, like the show, maybe leave a comment. We appreciate it.
It really helps us out.
And if you really appreciate the work, maybe consider supporting us by buying us a coffee. You can find the link for that down in the show notes.
Okay, let's get into it. Cameco.
Yeah, let's start right there. What exactly is Cameco? Where are they based? And what's their core business?
Okay, so Cameco is a leading global provider of uranium fuel. Their headquarters are in Saskatoon, Saskatchewan, up in Canada.
Saskatchewan, right.
And they are, in fact, the world's largest publicly traded company that's focused squarely on uranium.
Largest publicly traded.
Hmm.
That certainly sets the stage. So it sounds like it's more than just, pulling ore out of the ground. They're involved in more stages of that whole nuclear fuel cycle.
Oh, definitely. Their operations cover, well, pretty much the entire front end of the cycle.
The front end, meaning?
Meaning it includes uranium production. That's everything from exploration, actually finding the deposits, then the mining itself and milling it down into a concentrate, like a powder.
Yeah.
But they also have a pretty significant fuel services division. That's where they take that concentrate and refine it, convert it into the necessary chemical forms, and even get into fabricating the actual fuel assemblies that go into reactors.
Wow. Okay. So quite a few steps there.
And interestingly, they also have a presence in broader nuclear services. That comes through their substantial stake in Westinghouse Electric Company.
Westinghouse, right. That's a big name in nuclear technology itself.
It is. So Cameco's reach extends there too.
Okay, so they really touch multiple points in that chain, from, like you said, digging the rock to processing it into usable fuel, and even getting into services through that Westinghouse connection. Makes them seem quite comprehensive in this space.
That's a good way to put it, comprehensive.
Now let's look at the recent numbers. What does the financial picture look like? Maybe starting with the top line, the revenue.
Sure. Looking at the most recent quarterly data we have available, the company reported pretty strong revenue. It was approximately $789.43 million.
Almost $790 million. How does that compare?
Well, what really stands out is that this represents a significant year-over-year increase. We're talking about 24.6%.
Wow, nearly 25% growth year over year on revenue. That's substantial.
It is. And we also see indications of, solid revenue growth over the past 3 to 5 years. It seems to be driven by, favorable market conditions in the uranium sector and also the strategic long-term contracts they've put in place.
Okay, so strong revenue growth is definitely a positive signal, shows demand for their product is up. But how does that translate down to the bottom line, to earnings? What did we see there?
This is where the picture gets particularly interesting, maybe a bit confusing even.
No?
The latest quarterly earnings per share figure, the EPS, was $0.16. 16 cents per share.
Okay, and compared to last year?
Well, compared to the same quarter last year, this represents a very, very substantial decline, something in the range of minus 900%.
Wait, minus 900%, a drop, despite revenue being up nearly 25%?
That's right. It's a massive swing downwards on the EPS number.
So how does that even happen? Help me understand that. How can sales be booming while the reported profit plunges so dramatically in just a year? That seems counterintuitive.
It does, doesn't it? And that's the key question these numbers really raise. Now, the information we looked at doesn't specify the exact reasons, but, a divergence this large between strong revenue growth and such a steep decline in reported quarterly EPS, it often points to significant one-time factors.
One-time factors, like what?
Could be things like substantial expenses hitting in that particular quarter, maybe asset write-downs, or potentially even timing differences in how costs are recognized compared to revenue under accounting rules. It really highlights that while the core business, the sales side, is generating more, something unusual seems to have impacted the reported profit number specifically in that quarter.
Mm-hmm.
So that EPS figure is telling us, we need to look past just the top line for the full story of that specific quarter.
That makes sense. Something specific likely hit the reported profit, kind of separate from the overall sales trend. What about cash flow generation, from the actual operations?
Good question. The information does mention an adjusted EBITDA figure of $353 million for that first quarter of 2025.
Adjusted EBITDA. Remind us what that captures.
Right. So adjusted EBITDA is often used as a sort of proxy for the cash-generating capability from a company's core operations. It's before factoring in things like interest, taxes, depreciation, and amortization, and it often excludes those one-time items we were just talking about.
Okay. And $353 million sounds.
It suggests a pretty healthy operational cash generation capacity in that quarter, and that figure seems, frankly, more in line with the strong revenue growth than that really low quarterly EPS figure might suggest on its own.
Okay, so we've got robust revenue, apparently solid operational cash flow, looking at that adjusted EBITDA. But then this puzzling quarterly EPS dip. It sounds like we have some key financial pieces, but maybe not the full suite of metrics someone doing, really deep dive for investment purposes might want. Did the information provide other standard figures?
That's a fair point. The analysis we reviewed didn't explicitly detail several key financial metrics that investors typically rely on for a complete assessment of financial health and valuation.
Such as?
Well, things like the price-to-earnings ratio, the PE ratio, which tells you how much investors are willing to pay for each dollar of earnings, or the debt-to-equity ratio, which shows how much the company relies on borrowing versus shareholder funds.
Right, leverage is key.
Exactly. And also things like multi-year free cash flow trends, the return on equity, which indicates how efficiently they're using shareholder funds, price to book value, beta, which measures stock volatility relative to the market, and dividend yield. None of those were detailed.
So quite a few gaps then.
Yes. Those are all pretty crucial figures for getting a comprehensive understanding of valuation, leverage, operational efficiency, risk profile, and shareholder returns. To find those figures, you'd really need to consult the company's official financial reports or use comprehensive financial data platforms.
Got it. So some positive signals on sales and operational cash flow, a definite question mark on that specific quarter's EPS, and clearly a need to look elsewhere for a full picture on valuation and leverage. Let's shift gears now. Let's look at the company's strengths and how it stacks up against competitors. What are Cameco's key advantages?
Well, Cameco is undeniably a leader in this sector. I mean, they have extensive experience built up over decades and a really strong global footprint in the uranium industry.
Experience counts for a lot in mining, I imagine.
It does. And one of their core strengths is definitely their diversified portfolio of assets. They operate across different geographical locations, and they utilize various types of uranium deposits for their mining operations.
Diversified how? Like different countries, different types of mines?
Both. Having mines in different places and using different techniques isn't just about spreading risk. It can offer strategic advantages. It could potentially contribute to cost competitiveness and allow them to integrate different mining technologies effectively depending on the deposit.
Okay, so diversification across locations and deposit types helps manage risk and maybe optimize operations. Any other strengths that stand out?
Yes, there's also emphasis placed on their reputation for maintaining high standards in safety, health, and environmental performance. That's incredibly important for, public perception and just maintaining their license to operate in this industry.
Especially nuclear-related fields, yeah.
Absolutely. And their strategic approach using long-term contracts for a significant portion of their sales is also considered a major strength.
Why is that so important?
Well, this strategy helps to provide more stable and predictable revenue streams and pricing. That's a huge advantage in a commodity market like uranium that can be notoriously volatile when it comes to spot prices, the day-to-day market price.
Ah, okay. So that stability from long-term contracts sounds like a smart way to mitigate some of that inherent price risk you mentioned. Who are they actually competing against in this global market?
We see a few other major players highlighted. Kazatomprom, which is based in Kazakhstan, is a dominant force known particularly for its very low-cost mining methods. They use something called in-situ recovery a lot.
Kazatomprom, got it. Anyone else?
Rio Tinto and BHP Group are also listed. Now, they're massive, diversified global mining companies involved in, tons of different commodities.
Oh, the giants.
Exactly. But both of them have significant uranium operations as part of their wider portfolio, so they're competitors too.
Okay, so Cameco is competing with both specialized, potentially lower-cost producers like Kazatomprom and these huge, diversified mining giants. Knowing their strengths and competitors, let's flip the coin. What are the significant potential downsides or risks that Cameco faces?
Well, the uranium industry, just by its nature, faces pretty substantial regulatory and market risks.
Like what specifically?
Fluctuations in the price of uranium are probably the most direct market risk. Price goes down, revenues and profits can suffer, obviously. Beyond that, environmental and safety concerns are paramount.
And these aren't just theoretical risks.
No, not at all. They can directly impact operations through permitting challenges, public scrutiny, or even actual physical events. The analysis even mentioned things like wildfires potentially affecting their operations up in Saskatchewan.
Wildfires impacting mining ops.
Yeah,
Yeah, that's a very tangible environmental risk.
yeah.
What about broader economic or maybe global risks?
Well, supply chain issues are noted as a risk. That's understandable given they operate globally and materials, need to move across borders smoothly.
Makes sense.
Geopolitical risks are also very significant in this space. These can impact supply flows, trade relationships between countries, or even affect the stability and security of their operations in different regions around the world.
Geopolitics feels particularly relevant right now, doesn't it? Especially connecting back to energy security.
Very much so. And then there's just general global economic instability as another concern, as it can influence overall energy demand and maybe the willingness to invest in big nuclear projects.
Okay, so geopolitics, supply chains, economic stability, all big factors. How does the overall market environment for nuclear energy itself look right now? Is it supportive, or is it creating headwinds for companies like Cameco?
Looking at the wider industry trend, the nuclear sector is actually experiencing quite supportive market conditions at the moment.
Really? Why is that?
It seems to be partly fueled by that increasing geopolitical uncertainty globally we just talked about. That's really put a spotlight on the importance of national energy security for many countries.
Right, wanting reliable domestic power.
Exactly. And it's also influenced by a relative lack of significant investment in new uranium production capacity over the past decade or so. When you combine that with stable or growing demand, it really tightens the focus on securing supply.
So less new supply coming online, but demand is holding up or growing.
That seems to be the dynamic. Demand for nuclear energy remains robust globally. Why? Because it plays a critical role in achieving energy security, national security goals for some countries, climate targets being a low carbon source, and just providing stable baseload power, especially, in the context of trying to reduce reliance on volatile fossil fuel imports or dealing with those geopolitical supply disruptions.
Okay, so the risks like price volatility and geopolitics are definitely real. But the broader industry trend seems quite favorable for nuclear right now. That focus on demand and supply security could potentially benefit producers like Cameco.
That's the argument, yes.
Let's turn to specific recent news or events around the company itself. Were there any notable developments mentioned?
Yes, there was a key development mentioned concerning their investment in Westinghouse. It's actually an anticipated financial boost.
Oh, tell me more.
Cameco expects an increase of approximately 170 million US dollars. This is in its 49% equity share of Westinghouse's adjusted EBITDA.
So Cameco's share of Westinghouse's operational cash flow, basically.
Essentially, yes. And this expected increase applies to both Westinghouse's second quarter of 2025 and for the full year 2025.
And what's driving that expected increase?
Importantly, it's directly tied to Westinghouse's involvement in building new nuclear reactors, specifically at the Dukovany power plant in the Czech Republic.
Ah, okay, so that's a concrete piece of news showing their investment in Westinghouse is directly connected to actual new reactor construction, which is obviously key for the industry's long-term future.
Precisely. It suggests that their investment in Westinghouse is starting to yield tangible, positive operational profitability linked to these new nuclear build projects.
That sounds significant. Any other recent corporate activities noted? Sort of standard stuff.
Yeah, more standard items. Cameco also reported its consolidated financial and operating results for the first quarter ending March 31st, 2025, those numbers we discussed earlier. And they held their annual general meeting on May 9th, 2025, where board members were elected. Pretty standard corporate governance activities.
Okay. Looking ahead then, what might be the potential positive catalyst that could, drive the company or its stock further? Or conversely, what could pose future challenges?
Well, potential catalysts could certainly include future positive earnings reports, especially if they can demonstrate a better translation of that strong revenue growth into improved bottom line figures compared to that anomalous last quarter we saw.
Right, showing that EPS dip was indeed temporary.
Exactly. Also, favorable regulatory developments in countries that are planning to expand or build new nuclear capacity would obviously be a boost.
More countries committing to nuclear.
Yes. And naturally, any sustained increase in the market demand for nuclear energy globally would likely put upward pressure on uranium prices, which would directly benefit producers like Cameco.
Makes sense. And the potential headwinds or risks looking forward.
On the risk side, well, continued market volatility in uranium prices is always a factor. It could impact profitability unpredictably. There's always the possibility of potential new regulatory hurdles, perhaps around mining permits or transport regulations, or unforeseen geopolitical events could disrupt operations and financial performance.
Always the unknowns there.
Always. Regarding the stock specifically, the information we saw suggests the recent upward trend in Cameco's stock price could be influenced by those supportive market conditions in the nuclear sector we discussed.
The energy security angle, climate goals.
Right, and also the expected financial benefits from that Westinghouse investment, particularly the part tied to those new reactor projects. However, it's worth noting that detailed stock price trends, like over the past year, 6 months, or month, weren't available in the specific analysis we reviewed.
Okay, so potential upside tied to favorable market trends and the Westinghouse investment showing promise, but still exposed to the inherent volatility and the regulatory and geopolitical risks of the industry. Let's try to bring this all together then. So what does this all mean for you, the listener, trying to get a handle on Cameco based on this information?
Well, based on what we've discussed, Cameco certainly appears to be a significant, well-established player in the global uranium industry. They seem to be benefiting from their operational diversification across the fuel cycle, their deep experience, and importantly, that currently favorable trend towards nuclear energy, which is being driven by both energy security concerns and climate goals.
And the numbers reflected that, at least partially.
Yes, we noted that strong recent revenue growth, although that substantial quarterly EPS decline is a key point from the numbers that definitely warrants further investigation if you're looking deeper into the company's recent financial performance. It's a flag to dig into.
Right. And the balance to that overall picture, what else should listeners keep in mind?
While they have clear operational strengths, like that diversification and experience, and recent positive developments, like the expected financial contribution from Westinghouse tied to new reactors, they also face those inherent risks. Risks tied to market volatility in uranium prices, the regulatory environment, global geopolitics, and even environmental factors like potential operational impacts from natural events like wildfires.
So a mixed bag of positives and risks, which isn't unusual.
Not at all. And as we highlighted, without getting a full view of all the key financial metrics, things like the PE ratio, debt levels, free cash flow trends over time, it's difficult to make a definitive financial judgment or recommendation based solely on the information we had here.
So this is more of a starting point.
Exactly. This analysis should hopefully give you a solid understanding of Cameco's core business, the key numbers presented, including the ones that raise questions, the major strengths and risks involved, and maybe point you towards the kind of details you'd want to look for in official company reports or dedicated financial data platforms if you wanted to build a truly complete picture.
That provides a really clear overview of the situation based on the data we had. Thanks for breaking all that down.
My pleasure.
So here's a final thought to leave you with. Thinking about Cameco and the broader nuclear energy sector, how do the global pushes for both cleaner energy and energy security happening at the same time? How do they reshape the traditional risks and opportunities we usually see in volatile commodity markets like uranium? It's definitely a complex balance worth considering.